Be careful out there. We are still in silly season. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Wednesday, the 4th of January. How to spot the big moves in 2012. We'll be going over that today and showing you how to look for markets and find the big moves. It's a teaser because we're going to cover that in much more detail in tonight's show, MarketClub TV, at 5 p.m. You may want to tune in for that. 3 stocks on the move. That's VF Corp, Salesforce.com, and eBay. We'll be looking at those 3 stocks and what our trade triangles has to say about them. Also, the dollar is back on the move to gain tensions. Technicals and triangles propel the dollar higher. And let's go to the markets now and see the one truth we rely on every day, and that's MarketClub's trade triangle technology. But first, personal coaching, one-on-one coaching. This is the time to do it at the start of the year. There's lots of opportunities. So give us a call. It's a free consultation, 877-219-1482. A great time to get started. Now let's go to our charts. Here we are on our homepage, Market Club. There's my name, Adam Hewison. And you can see the markets are on the defensive after a big day yesterday. Not surprising, gold's up dramatically, about $18 high. We'll be covering that today. But let's start off with our portfolio manager, which we normally do. And here we are, the S&P 500 still plus 70, meaning it's an emerging trend. It's down just minuscule today. But here's the look we're looking at right now. This is a 3-month view using our Market Club charts, and these are candlestick charts. Obviously, when the red hits, it's a down move. That's a classic candlestick, Japanese candlestick charting. We've got a red move starting today a little bit, so it depends on how this goes, but there was no follow-through. The big thing I want to share with you today is this, and we talked about this yesterday briefly, and that is putting the Donchian trade channels on. You could see the market was out of the channel. When that happens in a trading range, it tends to come back in. Look at the similarities here. Up day, kind of a doji line here. We could be doing the same thing right here, and then the next day, in this case down, and we could have the same thing happen here. So let's watch that very carefully. The other thing going back here is a potential divergence. We say we made new, let me see if I can get this right for you. We made new highs right here, and in fact, let me put my telestrator on because I want to show you this and so you understand the concept. We made new highs yesterday on the move up, and let's just circle that right here. New highs right here, but the momentum did not make new highs. You see how we're going this way in prices, but the momentum is not following. Now, if we go down, if we see this close down like that, this will be, I think, a pretty negative sign, because the reality is, if you look at this whole thing, it's really just one big trading range. It really hasn't gotten out of this range. We need to either go out of it this way or out of it this way to get a significant move, in my opinion. I don't know what's going to propel it. It could be Europe. It could be something totally out of left field. It could be North Korea. It could be the Straits of Hormuz. Who knows what can happen? But generally speaking, we're still in this range, and until we get out of this range, it's a trading range, and we are in silly season. So be careful about that. Silly season means the markets are still very thin and choppy, and even a small order can actually move the markets pretty wildly. So let's go back to our portfolio and on to our next market. And that, again, is going to be silver. Silver is a 55 trading range. This is kind of the reverse. We fell out of the bottom of the Donchian trade channel, came back up. We're now in an overbought condition. I would expect this market to sort of roll over and once again test this 27 to 26 area on the downside, because the trend clearly on the monthly and the weekly is down in the silver. So let's move on to our next market, and that's also 55. That's the gold. Now we have our triangles have changed a little bit. It happened during silly season, so I don't put a lot of emphasis on it right now, but we did move out of the channel like we did here. We moved up, came back out. We've moved up to the midpoint. Again, I think this market's going to have problems around the 1620 to probably the highs that we saw this day, which is the 1640 area. So not too enthusiastic about getting long gold right now. I think it has to do some more backing and filling, some more support levels, and we are overbought. Again, I'm a little bit concerned about getting enthusiastic at the moment on this market. So be careful with that one, especially during silly season. Let's go to our next market, and that's copper. Now, remember we talked about copper we had the rally up here, and it looks like it's doing better. We've got two green triangles here, the daily and the weekly. And also the monthly looks like it's definitely challenging the downside. I think the trend is still down. Of course, today's big down reflects the longer-term trend in this market. Again, you're in a situation where this market sort of just meandered, kind of slowly sideways. You can see it just really hasn't gone anywhere. And I think we'll have a good chance to see this market move down. It depends on what's going to happen to the equity markets, but today is a good indication of the negativity in this market. Now, tomorrow could be another important day. If we close lower tomorrow in copper, I think we probably put in an interim top right here, and that's going to hold the market for the time being. So I think, generally speaking, the 350, 353 area is going to be resistance for any further rallies at the moment. So let's take everything off the screen. And let's go to our next market. And the next market we're looking at is crude oil. Now, crude oil has had this is a very interesting pattern in crude oil. All of our trade triangles are positive. You can see right here, positive, positive, positive. But the problem is we could potentially be creating what is called a doji line, which is right here. That's today's action. Now, a doji line, if you have a long candle and it sort of closes like that, which is where we are right now, means there's an equilibrium between the buyers and the sellers. So the buyers can't push it up and the sellers can't push it down. So this gives you that sort of unchanged area. But frequently, these areas, as you can see right here, tend to be turning points. If the market's going down, you see some doji lines like this, you need a confirmation like the next day, but they tend to be turning points on the upside. And if we look further back, I'm sure we can see some doji lines that have in the past that have turned this market on the downside. So again, something to pay close attention to. But generally speaking, the trend is a plus 90. It was a plus 100 earlier today. But generally speaking, the trend is positive. And I would rather be long than short this market at the present time, as all of our trends indicators are positive. So let's clear the screen again and go to our next market. And the next market we're looking at is going to be the dollar index. Now remember, we talked the dollar index yesterday. We said the 79.50 area, which was a previous high, would now be support. You can see the support has come into this market quite readily, and it's right around here. So I think we're going to be doing this type of scenario when we just sort of build this energy base. This is like a little energy base. And I think this is also going to be the appeal right here and here, the energy bases. So with the market builds an energy base, and we can see this market go high. The trend is clearly up with the monthly and the weekly. Only the daily's down, and I think that could change. And that could change. So I think generally speaking, we could see this market improve from current levels. So let's see how things work out. I'm sorry, that was my telephone that just took off. I normally turn it off, but for some reason I just forgot to do that today. So anyway, let's clear the screen, go to our next market. And the next market we're looking at is the Reuters-Jefferies CRB Commodity Index. That touched a level here, which we basically thought would be resistance, which is the previous highs. You can see right here and right here. We're sort of up towards the top of the Donchian trade channel. The market is also, if I can show you this, clear this off the screen and turn this off. If we go down, we can see this market is also very overbought. Not to say it can't go higher, but generally speaking, the odds probably don't favor that happening right now. I think we'd see some sort of consolidation, and I would not be surprised to see this market turn down again to build a bigger base to eventually move higher as we feel inflation is going to be a very key thing in the coming next couple of years. So here we are at plus 70, an emerging trend. We need to see the monthly trade triangle turn green to get really super bullish on this market, and I don't think that's going to happen anytime soon. So let's see how this plays out. But generally speaking, I think we're in the silly season. Again, I keep repeating that, but the reality is until the end of this week, this market's going to be really kind of flaky, and any kind of news that comes out will be a item to push the markets one way or the other. So let's go to our next market, and that's the euro dollar. The euro dollar, as we talked about this yesterday, The trend is your friend. The trend clearly is down in the euro dollar versus the US dollar. And again, today's big move, taking this market down below 130 and the 129.41 is real-time pricing. I think we can go down and possibly test the 129 area, which we did earlier today. But we're not oversold yet, so I think we've got some room on the downside. And generally speaking, the trend is down, and I think we're going to see this market continue to erode. You can see just on a very simple visual is that, I mean, just look at the way this market has come down. You just sort of very simple, boom, 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 boom. I mean, you just have to draw a line. That's a very strong downtrend, and that's just the way it is right now in this market. So generally speaking, I think the euro is going to continue to go lower. You do not want to be looking to buy or catch a falling knife, as they say in the business. Just let it. It'll turn around eventually, but it could turn around from a lot lower levels. So just be careful with this one. So let's clear the screen and go to some of the markets we talked about before. And we're going to look at the VF. This particular company, it's had a nice move today, but is it out of the works? Well, a couple of things here. Nice move up. It basically is a 75, so it's emerging into a trend. The longer-term trend is positive. And if we scope this out a little further, yet, go back a little there. You can see this market is sort of building like it did here. Let's go back and put our sketch illustrator on here, but you can see how it sort of built an energy field here, pushed the market up, and we're sort of building the same energy field here. There's the Donchian trade channel right where it was, but it reversed nicely. Only the weekly's down here, meaning the longer term monthly is still positive. But if we see this market turn the weekly positive, then you've got a strong trend, and you may want to get long this market because it looks to me like it could have another nice leg to the upside. So something to look at. And let's go and look at the other markets we talked about. And let's clear the screen again. And that's going to be the Salesforce.com, down 3.8% today. But the reason why, now look, this is the important thing I want to share with you, is look at our trade triangles. They're all negative. And look at where they started getting negative, not just last week or yesterday or whatever. They started getting negative way back here on August 8th. We're saying this market's in trouble. It never changed direction from that period of time. From 127, we're now at so $30 later, 30% you would have made on your money just since August of last year using the trade triangles. It's not rocket science, folks, and this is where I'm telling you, when you use the trade triangles, you're going to be on the right side of the markets more often than you're going to be on the wrong side of the markets. And it gives you the discipline and direction you need to be successful. So the trend in this market is clearly down. Minus 100. Can it go lower? Pick a number. Any number you want. It can and probably will go lower. So let's go to our next market, and that's eBay. eBay is obviously well known to everybody. And again, this is a negative 100. And you can see on this market, let me just move this right here. You can see we got really short here at 28.16, not a great short as the market came back up, but nonetheless, it never really changed the overall direction. Even today's down move, which it is a down move, let's put our weeklies in here. And you know, of course, you filter your trades with the weeklies. And here's the last sell signal we had, 30.65 to be short this market based on the trend in the monthly being down and the weekly kicking in. So here, so you have a small profit, but generally speaking, it would look as though, let's scope this out a little further. Wow, that's a tough market to trade when you have markets like that. And this is, we like trending markets at MarketClub. That's why we like to be diversified into several different markets. But generally speaking, I think this market, you'd have to say, let's take everything off the screen, you'd have to say that this market may be on the verge of continuing to go lower. So we had lower lows here. We've failed to take out the highs around the 35 level, and we tested them there. I don't know. That's I may want to just leave that one alone. But hey, be sure to tune into our show tonight at 5 o'clock right here on the MarketClub TV channel. We'd love to see you there. Answer your questions. Answer anything you have about the show. Jeremy Lutz will be joining me. It's our first show of the year, so we're very excited about our weekly show that we do. And we'll be covering a lot of markets. Plus, we're going to be showing you how to find winning trades in 2012 using our SmartScan technology. I think you'll really enjoy that segment. So this is Adam Hewison for Market Club. I'll see you at 5 tonight, but just remember, you may want to give us a call for a free consultation, 877-219-1482 for one-on-one Market Club coaching. I think you'll really like that. It'll really help you in the new year. So I'll see you at 5. Have a great trading day.